Today guys, we will be talking about some highly predicted growth of Safemoon and will justify it by going through Safemoon Tokenomics. We will also go through some technical analysis in this regard, so sit tight and don't miss any part of the video. Also, before going forward, always do some background research before investing. It is not a financial advisory video, this is an instructional video and does not contain any financial recommendations. Cryptocurrencies are subjected to high market risk and volatility despite their high growth potential. Users are strongly advised to do their own research and invest at their own risk. Without further ado, let's get into it. First of all, let's see what a tokenomic is. The crypto industry is always bustling with a number of digital assets, tokens being one of them. The study of the economics of crypto tokens or cryptocurrencies is called tokenomics. It fundamentally involves studying the factors that impact the demand and supply of tokens. The factors include quality, distribution, and production of crypto tokens. What is a token? Crypto tokens are digital assets associated with cryptocurrencies that have a specific value and are used for investment or for some other specific purpose on the blockchain as defined by the crypto world. They are stored and operated on the blockchains of cryptocurrencies. Because cryptocurrencies and tokens are issued according to predetermined and algorithmically generated schedules, it is possible to estimate their supply with a significant degree of accuracy. Due to the fact that tokens are digital units of cryptocurrency, a limited cryptocurrency supply also implies a limited token supply. As an investor, why do you need to know about tokenomics? For these reasons, it is essential for investors to know the demand and supply factors of the crypto market. It gives an understanding of the short-term performance of the crypto market according to Seth Klarman's book, Margin of Safety. Tokenomics also helps to ascertain the future worth of an asset. Moreover, it gives an insight into the profitability of one crypto asset over the other in the future. Nevertheless, investors should remember the following factors that help to get hold of tokenomics. There are a lot of things you need to know about digital currencies, like how they work and how they connect to the services being built, find out the total number of the existing tokens, their future stock limit, and when they will be created. It also confirms that they do know about the owner of the digital coins and whether the coins are reserved to be released later to the coin developers. Now that you guys have a clear idea of what tokenomics is and how important the term is, let's move to the Safemoon Tokenomics. Like other cryptos, Safemoon Tokenomics also guides on how reflections, burn, and liquidate liquidity pool injections. Safemoon Tokenomics is what makes Safemoon. Let's see part of the tokenomics key mechanics. Fees. Tokenomics are the fundamental building blocks of the Safemoon protocol. They allow every single person holding onto the chain to receive a small portion of the fees that are charged on each Safemoon transaction. When a transaction occurs, there is a 10% fee to the holder that initiated the transaction. 4% of this fee is distributed to all holders as reflections, not including the burn wallet, which has 2% of the 10%. The remaining 4% is split between 3% LP generation, which is used to fund the liquidity pool, and 1% Safemoon ecosystem fund. A 2% transfer fee is also attached to Safemoon V2. This means that all trades or transfers between wallets will use a 2% fee instead of the existing 10% for Safemoon V1. It should be noted that this does not eliminate the 10% fee on purchases and sales. Reflections. So, those are the fee amounts covered. We now need to understand what these fees are for and how they are distributed through what is called tokenomics via the mechanic called reflections. Now, what are my reflections? Reflections are a kind of passive income that is based on how much Safemoon you have in your wallet. Of the 10% fee charged on transactions, 4% goes to reflections. The 4% that goes to reflections is what is distributed to all holders, excluding the burned wallet and exchange hot wallets, plus any additional excluded wallets the team might remove from this list. So for example, if you own 1.5 billion SFM, you are getting 0.1500% of that 4%. This 4% distribution amount is distributed to all holders, of which there are currently over 500,000 and growing for Safemoon V2. Burn. The Burn wallet is the largest wallet that holds Safemoon to date, and it currently holds 43% of the total supply and is growing by the second. Now, why is it called the Burn wallet? Well, the Safemoon protocol has a deflationary aspect which is called the burn. The burn wallet takes its portion of the tokenomics fee, which is 2%, and functionally does just that, it burns them. The burn wallet has no seed phrase, meaning these reflections are sent to an inaccessible address that can never be retrieved or interacted with by anyone, thus maintaining the deflationary aspect of Safemoon. Liquidity. So we have spoken about the 4% given to all holders and how Safemoon incorporates the burn into its fundamentals, but where does the other 4% of the fee go? 3% goes into what we call a liquidity pool. This is the address at which the value of Safemoon is stored. Currently, Safemoon operates on the Binance Smart Chain, so its store of value is paired with BNB, the native token of the BSC blockchain. But how exactly does it pair with BNB? Well, we take 1.5% of BNB and 1.5% of Safemoon and simply pair them in the liquidity pool. As the volume changes on a day-to-day basis, the liquidity amount will change based on people buying and selling Safemoon. Definition of liquidity. A company's or market's ability to access liquid assets. An asset is considered more liquid if it can easily be converted into cash. The harder it is to turn an asset into cash, the more illiquid the asset becomes. For example, stocks are considered relatively liquid assets as they can be easily converted to cash, while real estate is considered an illiquid asset. The liquidity of an asset affects its risk potential and market price. And the final 1% is added to the Safemoon Ecosystem Growth Fund. This will cover things such as development for future technology or server expansion on the up-and-coming Safemoon exchange. To conclude, if you still haven't grasped the percentages of how the tokenomics are redistributed, let's take a quick look at a simple breakdown. Reflection. For the reflection, the percentage is 4%. 4% is redistributed to all existing holders. LP acquisition. For liquidity, 3% is added to liquidity. Token burn. 2% of tokens are burned. Growth fund. 1% is added to the Safemoon Ecosystem Growth Fund. Safemoon V2 is the first breakdown of the Safemoon improvements. While it contains a lot of what we know and love about Safemoon, it has a whole lot of room to grow that we didn't once have. Having the ability to create and adjust different rates based on the requirements is huge, as it means that they can indirectly control the burn and liquidity generation and anything else that seems fitting to the tier system that they would like to create. Finally, some important words. Investing in cryptocurrencies can be extremely risky, and it is possible to lose all of your money. This guide should not be considered investment advice, and you should proceed at your own risk if you decide to invest in cryptocurrencies. Moreover, no inducement to buy or sell cryptocurrencies is implied by the information provided in this video in any manner. The opinions expressed in the analysis reflect the perspectives of various external and internal analysts at any given time and are subject to change at any time. Furthermore, they are incapable of constituting a commitment or guarantee. Therefore, any such investment is considered a high-risk investment for which the recipient is solely liable. This means that the past performance of a financial product does not in any way predict the future performance of that financial product. That was all for today's video. If you enjoyed the video, please share your thoughts in the comments section, and if you're new to the channel, don't forget to subscribe. Thank you so much for taking the time to watch this video.